For those of you that are just joining us, thank you. This is the first session of our advisor roundtable. It's going to be a pretty informal, casual discussion. So thank you, Michael Eckstein, for showing up. We were actually just having a few chuckles there behind the scenes, and we said we should have actually saved that for this discussion, because there was already some good tidbits coming out there in the first couple minutes. So again, this is just informal session discussion between myself and somebody that I like, who's Michael. Maybe I won't like him after this, but I guess we'll find out. Just poking his brain about different things around accounting, bookkeeping, consulting, and all that kind of fun stuff. And so we'll see where it goes from here. That said, Michael, I'll throw it over to you for a little bit of an introduction. Tell us a little bit about yourself, your firm, where you're based out of, all that kind of fun stuff, and we'll go from there.
Thank you. So I'm Michael Eckstein. I'm an American tax accountant, right? So when I talk about accounting,
good to qualify that.
It is, which, side note, because God forbid I stay on topic, every now and then I'll have a client or a potential lead reach out from somewhere else. I had someone from Spain, and I was like, that is an entirely different accounting system from the one I'm used to. So when I talk about accounting, it's from a GAAP and like the tax from an IRS standpoint, right? But I'm an American tax accountant. I'm located just east of New York City on Long Island, and I run a little solo practice. And right now, I guess I'm most famous for yapping on LinkedIn, right?
Is that what you're famous for?
I mean, I guess that's why I'm an influencer, right? Because
let's dig into that a little bit, because that's where I met you, was on LinkedIn. I think we jammed on a few posts somehow and started going back and forth and liked each other's stuff and said, hey, we should chat. So we actually did. I think one time at the very least, maybe twice. Yeah. But the first time I ever noticed you was when you had LinkedIn's cutest accountant. There was a little sticker or a t-shirt, I think, even going around.
I do have stickers.
Let's talk about that. Where did that come from?
For the people that are here, I've got a bunch of stickers. So I might order more, but where that came from was when I first started posting on LinkedIn, everyone was LinkedIn's most interesting accountant, or like the most interesting accountant in the world. And I was like, mathematically impossible, right? That's just one of those that, mostly there's got to be 7. And we're going to get very accountancy about it. If you use different valuations and different metrics, there's like 10 most interesting accountants in the world. They can't all be from like fucking Utah, right? They're just, you can't have that many in that one little area. And I was just making a joke out of it. I was like, all right, fine. It's going to be category creation. The new category is LinkedIn's cutest accountant. I have first mover advantage on it. And it's just a joke that went too far and kind of stuck around for like a year plus now.
It seemed like you got pretty good traction on it, at least on LinkedIn. So did that kind of transpire into leads for you, like customers, or is that just more just having fun on social media, or kind of what transpired out of that?
It's more having fun on social media. LinkedIn's cutest accountant has like never turned into leads. It's turned into, I guess, referrals, because like that sort of joke is what started building certain relationships with people that are now friends that have referred business over the year.
Yeah.
But no, I've never had anyone fill in like the Calendly scheduler, and where I ask, where do you hear from me? They just put in LinkedIn's cutest accountant. So can't tie anything directly to
it. And I noticed recently this little bit of a tie-in with that. You're now officially, I believe, correct me if I'm wrong, a LinkedIn creator and top voice. Did I see that correctly, or was that just you? No, you're just being full of it.
No, I wasn't even being full of it. So for everyone that doesn't know me personally, I'm single and I'm swiping through dating apps. And as I was swiping, I saw someone's bio on their dating app that they were a LinkedIn top voice. And I was like, now I got to go find this person, right? Because I didn't recognize their face at all. I was like, I feel like I recognize all the LinkedIn yappers, the people that just like post all the time. But no, I was just asking for feedback. Is that a green flag? Is that a red flag? I don't know. If you self-describe as an influencer, is that a good thing?
Yep. And so what came out of that? Is it a good thing? bad thing. Consensus.
So the comments all agreed I should swipe yes because that'd be hilarious, but I ended up swiping left. I ended up going no. So I haven't broken the news to the comment section that there will be no more drama or gossip around that, and we just kind of like moved on. But
it's funny. So
yeah.
you use LinkedIn quite a bit for your marketing, or at least it appears that way. So let's dig into that a bit, because you and I have kind of talked offline a little bit, and you're still very much a compliance firm trying to find, using your words, your flavor of business consulting. Yep. So like, how are you, from a marketing perspective, how are you kind of using LinkedIn as you find your flavor? Like, what does that look like? Kind of walk us through what your approach on LinkedIn is, because I think what you're doing on the app is actually, on the platform, is actually really interesting.
Yeah, so the approach to LinkedIn for me is to not talk about compliance type things. So like, I don't really talk about accounting or taxes. And when I do, I talk about it in a very limited sense, because I feel like our end clients don't give a shit. You know what I mean? Like the nuances of depreciation are important to us. The end client doesn't care. The end client cares that they're in compliance, that their numbers are accurate, that they can make decisions, that cash flow is correct, healthy-ish, and that taxes are correct, they're not audited. That's what they care about. They couldn't care less about the difference between GAAP depreciation and tax depreciation and IFRS depreciation and whatever. They don't care, right? So I don't talk about compliance type stuff, right? I mean, like, if there's like an overwhelming strategy to what I post, no. There's never been too much of a strategy on this end. It was kind of happy little accidents and experiments that kind of morphed into something, right? And one of the things, I guess, most important things I've learned from LinkedIn is everyone views it as a way to get clients, and the way that all marketing efforts are to get clients. But it's underrated as a way to network with referral partners. So like, while I do get like warm leads that are like, hey, I need an accountant, it's also the same thing like when you go to business networking events and you're like networking with the insurance person and the financial advisor and the handful, like the business coach, the people that typically traditionally send us clients and we send them clients. Well, those people are on LinkedIn too. And those people still have clients that need an accountant, right? So for me, the biggest, I guess, benefit of this whole LinkedIn marketing and everything like that, the immediate benefit was the referrals from financial advisors.
And you found those mostly through your LinkedIn, or did you find those mostly through the newsletter that you've also built out?
LinkedIn, I think. The problem with my marketing is because it's not sophisticated at all. There's no like metrics, no tracking, no fancy MarTech making sure attribution is calculated. I can't tie any one thing to any specific thing. So like, I don't know if, the email I sent last week is what created the lead I'll talk to tomorrow, right? Or like what pushed them over the edge, and they're like, yeah, I'll contact them now. So I like to think the newsletter contributes, just because that makes me feel better about writing it every week and the amount of stress anxiety it gives me. So I'm going to say it is actually the core of my lead gen, because otherwise it's a fucking waste of my time. It's, side note, if none of you write like a long form newsletter, it sucks. It's like I have a love-hate relationship with the newsletter, right?
Oh. And let's dig into that a bit. We're kind of going all over the map here, but that's okay. That's just how we roll. Let's talk about that newsletter, because it is long form. Like I subscribe to it and I read it. I'll admit the odd time I'll garbage it, but there is a lot of really good content in there, and it is long form. Like every time I get it, I read through it, and it actually blows my mind how much you actually write. So like, how long does that take you? What does that look like? Because you even mentioned that it stresses you out. So kind of what does that look like on your end?
The weird thing with the newsletter is like, so that for the people that don't know, the average newsletter is 800 to 1,000 words long. And it's typically 2 intro paragraphs and a bunch of bulleted paragraphs with like tips and stuff, right? It takes me a good long time because for me, because I'm an accountant, I'm not a writer, I need to like be in the headspace and like really be kind of clicking with my topic. You know what I mean? Like I have a list of topics and every week I look through it and I'm like, hate it, hate it, hate it, hate it. And if I don't love the topic, I can't write about it because it's like if you had to sit down right now and talk about invoicing best practices, if you're not in the mood, that's like it's a drag to just be like, oh, well, make sure the terms are right. Like, so that is one of the biggest stressors of writing the newsletter is finding the topic and then actually forcing yourself to write. Because for us that aren't like, I mean, most accountants, other than writing like opinion letters or cover sheets or things to whatever taxing authority, we're not really like writing anything, right? So kind of getting into that zone where I'm like, okay, here's the topic I want to write about. I am going to write about it. And here are my smart thoughts about it, right? Which is part of the anxiety because like, we all think we're really good and really smart, but it's another thing to be like, here are my thoughts and the way I look at these cash flow topics and kind of putting it all out there for people to judge in a way. Right. Yeah. And the list is like, yeah, there's a bunch of business owners, but it's like half accountants at this point. And like, I don't know how to tell people that it's literally like, there's nothing going to be like nothing earth shattering. I'm not going to like invent a new type of accounting and like introduce it to everyone and be like, wow, look at this new way to do debits and credits, right? It's things a lot of us already know, right? But on the other hand, like taking whatever thoughts you have on cash flow that may be a little bit less than traditional and being like, so this is how I view it, to a bunch of accountants who are very quick to be like, no, the academic correct way is to do it that way, is nerve-wracking. Right? Because I've realized like over the last year, like I tend to look at cash flow a little bit differently, right? From the traditional way of looking at it, right? The traditional way of looking at it is that it's inflows and outflows and you try and control the inflows and outflows, right? For me, I think it's the processes behind it. If you can fix the processes, you can heavily impact the cash flow, right? And every week is kind of like standing on that soapbox and being like, please don't hate me. Like, please don't unsubscribe. Because the last thing I want to do is go to like the next conference, like AICPA Engage, and everyone's like, oh, fuck that guy. Guy's an idiot. That would suck.
But I'm guessing that probably hasn't happened.
Is there because I didn't go this year, but is there a secret accounting Slack channel where like, get a load of this asshole? Like, I don't know. Maybe.
Hashtag
there's one or two accounts that don't like me.
So like in terms of that, like how do you, where you just went there's a whole bunch of other topics that I could go off of. So you're talking about finding the time and, you know, not getting stressed out about it and kind of getting a little bit creative about it. So how do you do that? Because I think that's pretty useful for a lot of us to know in terms of how do you get into that headspace? Like you're pumping out one of these a week. So either you're doing it every week or you're batching like 20 in a go. But either way,
not batching. Batching would be so smart. These are like freshly baked. Every single one is written within 24 hours of when I hit send. Also, side note for everyone here, if you get one at like 6 p.m., that's because I finished it at 5:30. Whenever you get it, it was done like 45 minutes prior, max, right? No, so in the beginning when I got started, right, it definitely sucked. Like the original newsletter is totally different than it is now. It was not like as high of a quality. It was shorter. People were unsubscribing a lot, to be honest, left and right. And in the beginning, it was kind of forcing yourself to go through the period that sucks. And I think with every new venture, whether it's marketing, a new service offering or whatever, there's going to be a period that sucks while you're kind of fleshing it out and finding your way, right? So in the beginning, it's literally forcing yourself to get through the first 2-3 months while you kind of find your voice, your formats, how you're going to get people to subscribe. That took me forever to figure out. right? That's why I'm on LinkedIn, to get people to subscribe to the newsletter. That's why. And now what makes me keep going is all the effort I've already put into it. And it's like that feeling when you're in high school or college and you have like a paper due, and it's not about, do I want to do it? It's like, I will fail this class if I do not send this newsletter. That's like the feeling I get. And that just like is what pushes me through writing the newsletter. I'm like, if I don't get it out by the end of the day, I failed. And all that effort was for nothing. And like, no, that's not how that works in real life. I'm not a failure for skipping a newsletter. But in my head, I'm a failure for skipping that newsletter. No one's going to be like, oh, damn, where are my cash flow insights on this Saturday afternoon? It's only me.
Yeah. So it has morphed quite a bit. Like I didn't join right from the outset, but even in the last year, it's changed quite a bit. You know, you've got kind of a new name for it, really, because I don't think it was called Resting Business Face before.
No.
And definitely the content and the format looks a lot different than it used to. So, you know, you're talking about the evolution and trying to find things that triggered for you. Like, what was kind of the biggest thing that triggered where you're like, okay, people are not unsubscribing anymore, and this is what really kind of pushed people over the edge? And, you know, or have you found that?
So I feel like I've been at a good maintenance for a little while now, where like it just kind of keeps chugging along. There's not a ton of unsubscribers. There's not a ton of new subscribers, unfortunately, but it's been chugging along. And the period where it really started, I guess, doing well for me was where certain either accountants or other people I admired were reading it like regularly, right? And certain, I guess, ideal clients started reading it. And I guess kind of once those handful of other smart accountants were like, yeah, I read it every week and don't unsubscribe, I was like, all right, so I can't be that dumb, right? That's kind of the silent stamp of approval. That, or like they're secretly laughing and like every week this is their entertainment, which would be like so screwed up, right? But I'm assuming that's not what's going on, right? I mean, I'm here talking about it, right? But no, the weird thing is like from an accounting, you know, strategic like CFO perspective, I can't attribute anything directly to it. I can't say it's definitely a part of my brand I need. I can't tick off any of those KPIs, metrics, or whatever. But for me, I feel like it's a core of the brand. So like I can't get rid of it. Right? Which is not in line with normal accounting thoughts. Because like if I was talking to a client and a client was like, I spend 4 or 5 hours a week writing a newsletter. It's a small audience. It stresses me the hell out. I'm not sure if it's good. Our advice would be like, you should stop. What the fuck is wrong with you? Right? That is what we would all tell clients. And yet,
it's part of your core brand. Like to me, I feel like even myself, I identify with your LinkedIn posts and your newsletter as well.
Right.
So, I mean, sometimes there's value in doing things that maybe don't get attribution right away. Like we always talk internally about metrics are hard for marketing because, you know, you want to track from point A to point B, but the reality is most people don't think that way. Yep. They'll read your newsletter once or twice. They'll go see your LinkedIn social media a couple times. Then maybe they'll check out and that can be in a completely random order from customer A to customer B or person A to person B.
Totally
it's
different
not
orders.
A linear process.
And totally different timelines. Right. Yeah. So one person could be like, see 3 posts and be like, that's it. He's the accountant for me. Another person could be 2 years, you know. It's tough. I had a point in there about it. But yes, it is the core of my brand in my mind. Oh, I guess the reason I do it is because writing things regularly forces you to take the thoughts you have, they're all jumbled up, and actually order them. Right. Yep. So some of the things I continually talk about, like in the cash flow space with invoicing, profitability, savings, that sort of thing, I've had these thoughts for a while, but until I actually wrote it and I was like, I have to make this intelligible to other people. Right. Yep. That's what makes you actually write it down and realize, oh, I never thought of this part like that. And yep. In a way, it helps me not discover new things, but like uncover new thoughts that I'm having and Also, it is kind of cool when someone asks a question, you're like, I have an article for that I wrote. That does make you feel like you're a real person. I don't know.
Yeah. Well, and I think writing it down helps, kind of as you're alluding to, it helps formulate your own thoughts and almost put a little more structure behind it. And to that point, like, do you ever find that are you ever concerned about repeating yourself if you're jamming these things out, 30 minutes before you need to send them out?
Yeah. So I am very concerned with repeating myself, which is, from a marketing perspective, a little bit silly because no one remembers what you wrote or what you thought like you do, right? Like, I could sit and probably remember all the articles I wrote for the last few months, but if I asked any single person, you'd forget, right? I could write about the same topic I wrote about literally 3 months ago. As long as I'm not copy and pasting it, most people aren't going to recognize it. And especially for small business owners that are reading, where these concepts aren't entirely new, right? The average small business owner has no financial education like us. So like with us, if you explain a finance concept to an accountant, maybe once, maybe twice, and they've got it because that's what we do. But for clients, they don't. So you could probably hammer home the same idea of like getting paid up front to improve cash flow 1,000,000 times before it finally sets in, right? If you go through LinkedIn, at least once a week, you find someone complaining about how like their invoice hasn't been paid for 2 months, right? You could literally hammer at the same point forever. But for me, like, I do feel bad about repeating the same topics. And if I do, I try and get a new kind of angle on it. Because for me, it is a little bit of exploring the thoughts too, right? So if I'm copying it, I'll outright copy and paste. And I did that a bunch in April to take a break. But if I'm writing it, I always try and find a new angle to, I guess, add something to the conversation, right? Because the thing with the newsletters, there's so much like, I mean, not even so much. There's crappy finance content out there. And like a good chunk of it. It's like, I don't want to add to all the kind of crappy finance content. We already have a lot of it. Like, we can all go, if you Google how to send an invoice, it's like 20 articles that all say the same garbage about invoicing. We don't need a 21st. And I don't want to write the 21st.
Yeah. Sorry, I got a little background noise here. So like, how do you, in terms of that, because you do talk quite a bit about cash flow issues. And so I know you frequently talk about the human aspect of it.
Yeah.
So like, let's talk about that a little bit, because you said, I may have made a grave mistake inviting you on this episode. So, let's dig into that a bit.
All right, we're going to go on a whole-on rant. So the accounting community as a whole is moving from compliance to advisory and consulting. And everyone's like, we have to go from being reactive to proactive. So the obvious choice we've all decided is, instead of doing P&Ls and balance sheets, we're going to move to cash flow forecasting. In my opinion, cash flow forecasting is only technically more proactive than a profit and loss. Like, technically, because a profit and loss is historical data and a cash flow forecast looking forward. But at the end of the day, a cash flow forecast isn't affecting the cash flows. It's planning, literally forecasting, and trying to figure out what's going to happen before it happens. But if we want to be truly proactive, we should take a further step back and look at what affects cash flow. So like the processes and the humanity of it, and the bottlenecks are inside the businesses. Because we can sit here and forecast forever. You could literally just continue to forecast every single month. But until you go and attack those kind of processes and human elements and bottlenecks or whatever it is, you'll keep having the same problems. And like, certain businesses cannot get away from cash flow forecasting, right? So I'm not saying it's bad. Certain industries, like where you have very tight margins or weird situations, so like staffing firms, construction, restaurants, hospitality, all right, you can't get away from forecasting. Or anyone with legit COGS, right? Retail, right? You can't get away from it for a certain extent. But simpler, more straightforward, like service businesses, a lot of the time, forecasting doesn't actually fix the issue. And you kind of wind up in this constant treating the symptom without ever actually fixing the disease, right? which is like cool from our side of the equation, because we get to pat ourselves on the back and be like, oh, we were more proactive, we provided value to the client. But the true value would have been to fix their like crappy invoicing process a year ago and then never have needed forecasting because it was never a problem anymore, right? So that's, I think that as the way we think about cash flow, we focus too much on the numbers, the inflows and the outflows themselves, and less on what causes them to be off time. Like if one invoice is late, that, all right, that's a micro issue. We have to fix what the hell is going on with this so we get the money to pay our payroll. But if every other invoice is late, that's not a micro issue. That's a something is going wrong. And like, yeah, you can forecast it and fix it by forecasting, but like you're avoiding the real problem, you know, in the name of being proactive, right?
Yeah. So your real beef, if I'm going to summarize this, is really cash flow forecasting is useful, but a lot of people are using it as a crutch to just say that they're being more proactive without actually surfacing and solving the real issue behind what's causing the cash flow issues. Yeah,
cash flow forecasting.
I would 100%, 100%. Like, you know, being the cash flow forecasting person on this call, I 100% agree with everything that you said. You know, like what we really espouse to at Helm, and, you know, what we kind of, where it came from on the 2080 side in my own consulting firm, is really fixing those processes. You know, that's why I actually watched your little, I think it was a 2-minute video on the human aspect of cash flow. Like I agreed with everything that you said on that video. I should have saved the link for posting it up here, because I thought it was really good. But you talked about, you know, invoicing. It might not act, it's not a cash flow issue. It might be a human issue in the way that you're even talking to the people on the other end.
Yeah. And that's not something we discuss in accounting thoughts. Because like in accounting, it's like, it's always about the numbers. But at a certain point, the numbers are just reporting an action or an activity that happened. And sometimes the problem was in the activity. And we can't just sit in the numbers forever. And that's part of the problem with talking about cash flow. Like you agree with it, I agree with it. But if you go out and look at people talking about cash flow, the conversation is always about numbers, right? And it's to the point where sitting and saying it's about the people and the processes is like a crazy concept. But if you explain it, everyone kind of casually agrees, right? It's not, in my opinion, talked enough about as far as accounting advisory goes.
So, you know, devil's advocate, like what do you think the solve to that is? Because, you know, we talk with a lot of people and we see a lot of systemic undervaluing of existing services as it sits. So, you know, there's a lot of juxtaposition there in the sense of you've got a profession that is really good at undervaluing what they do. And maybe, you know, to your point, not really understanding that there's a lot more that business owners would appreciate you doing, like helping with the human aspect. But how do you match those two up in the middle? Like, how do you get a professional to wrap their head around that? And, you know, like basically what I'm talking about is not worrying about, or worrying less about, the perception of what the value is that you're providing the business owner. Because I fundamentally believe that that's what a lot of this ends up coming down to, is there's some people out there that understand that's what needs to be done, but some people are maybe scared about charging for it.
I think there's a little bit of that people are scared of charging for it. But I also do think there's been a push towards advisory when a very large percentage of clients don't see the value or don't want it. You know, realistically, just like you were saying, IFRS and GAAP are for the top 5% of companies. You could say similar things about consulting. Not 100% of companies and small businesses, if you're using like the full definition, including freelancers, need it. There is a percentage. There's over a certain gross revenue where finance becomes the limiting factor and they need to know finances. But if we're all being real honest with ourselves, you could totally wing finances under a certain gross revenue, right? And we've all kind of stepped into companies where like, holy shit, how are you alive? right? Where they've never looked at finances beyond their bank balance. Their tax return is always late. Everything is screwed up, but like they're still chugging along and they're making good money. And I think part of the issue is that we're afraid to charge for the value, right? Like you're saying, we don't know how to structure it, because the thing is, like, for a tax prep engagement or for an accounting engagement, we know what goes into it. We know what the deliverable is. But like I said, with me finding my flavor of consulting, you need to figure out how you're helping clients. And that's weird for accountants. And I think that's why we're kind of so focused on cash flow forecasting, because it is compliance. It has a deliverable. It has a process. It has a checklist, but it's proactive, right? But I think a lot of it is we'll all have to find our flavor of consulting, what it is we're super good at helping clients with. And it's something I'm still kind of working my way through. You know, is it just me kind of coming in and overhauling their finance system and be like, this is how cash flow should be done, according to me, right? I don't know. It's those two things. And the last one, like I was saying, that plenty of clients don't want consulting, and it is fine. And if an accountant does not want to offer consulting and they just want to offer compliance, that's perfectly okay. For every client that buys consulting time with me, has a consulting retainer of some sort, there's another 10 that are compliance only. Because the reality is that as much as I would love to be purely a consultant, at this point, I don't have the size of an audience for it. I don't have enough clients coming in that see the value and care. And compliance pays bills, right? As much as we all hate the ticky-tacky doing the bookkeeping stuff, that pays bills. Someone's got to pay my rent. Like, you know what I mean? Like the money. And as much as we should always be like, oh, we only take the ideal client that has the ideal service offering. When someone comes and they're like, we need a full accounting engagement, and you have the capability, and they're like, we'll pay you $5,000 a month for it. Yeah. All right. Yeah. I'll take that. So I think advising and consulting is a weird space in accounting right now. And until it's defined and people will see the value in their own current work, it's going to stay a weird space.
Do you think it ever can be defined? You know, we've had this discussion, not we, but we as in Helm have had this discussion with other people in the past where, you know, advisory is a huge catch-all term that really can mean, I mean, I could be a bookkeeper and be an advisor, and I can be a tax person and be an advisor. I'm just advising in my respective space. So like, you know, where do you draw the line? And I, you know, from my perspective, I feel like that really does hone down to what's your ideal client? What do they value? And can you tailor what you want to do and how you want to do it to them?
I think you can define advisory, but we're going to have to get more nuanced than what we're doing now. Because right now we're just like, everyone should become an advisor. And that'd be like saying we all do accounting, which is like such a catch-all for what we all do, right? And we're going to have to niche down the different kinds of advising. Like you said, tax advising. You know, maybe instead of just calling it advisory and we all just do advisory, you know, you specialize just in tax advisory. That's where you're at. You're super knowledgeable about some sort of weird entity structure in your country. So like trusts in the US, you're just like crazy knowledgeable about it. Then you can advise in just trust taxes. But I think as long as we just kind of give the catch-all term, it's like when you're an accountant who doesn't do taxes and you go to a family event or a cocktail hour and you're like, I'm an accountant. And they're like, you do taxes? No, there's other types, right? There's other types of accounting. And I think we all have to figure out the types of advising we can all do. And
that's not just a problem at dinner parties. I just had a discussion with my wife last night about, oh, my dad's moving back into Calgary where we live and he needs a new accountant. You can do his personal taxes. It's like, honey, I only do corporate.
You're like, I don't even do ours.
I can't do that. What do you mean? You're an accountant? No.
And that's the thing. Like, I have clients that are accountants. You know, they're like controllers at companies, but like they don't do their tax return. And I think that's the problem we have with advising right now, that we need to kind of niche it down and define what the types of advising are, and all stop jumping on top of the cash flow forecast train, because I think it's overrated. I think a lot of businesses don't need cash flow forecasting help, even though, like I said, it's important. I think a lot of businesses don't need the help. They need the help with the processes and the behind the scenes admin stuff and getting up from there, right? They're not ready for consulting.
Sorry, I was trying to read a chat and now I lost it there.
All right, we'll go on a tangent.
That's funny. There was this, I think somebody was going to say it's a good tangent that we're on right now, but I don't know where that message went.
All of my tangents are good. No, but
Right?
that's the point. Like, for the people watching the recording and that don't have the chat, Beverly is saying that the tangent is right. It's advisory for who? You know, as an industry, a client profile, or a professional profile, right? And that's a thing we're kind of leaving out of the conversation, right? We all said we have to be proactive. Cash flow is the way. But there's different types of advising. There's different industries that need advising. Like, I don't touch on like construction businesses. I could not advise a construction business tomorrow. And I have construction clients, but like, it's a space and you need some sort of expertise and knowledge in there. Like, and maybe we also have to define advising by industry too, right? There are huge differences between, you know, for example, construction, retail and e-com, and service businesses. You know, a lot of what I talk about from a cash flow perspective works in service businesses. It does not work in construction, right?
Yep.
It's a different beast, right?
Yeah, there's a lot of value in terms of niching, or niching as you would call it. You know, I totally agree where it's really good to find your wheelhouse and really hone in some expertise on it, because it makes the service delivery a lot easier. It also, what I find in terms of people scaling, like if you're a one-person shop and you just want to work whatever, I mean, you can take whatever client you want and you can usually make it work. But if you want to truly grow as a company, that usually requires some kind of process, system, standardized procedure, you know, this, even if you're a team of two, which usually means it's easier to do if you focus on one specific industry area, expertise, whatever that means.
And that's,
you know, so
scaling advisory is a problem we don't talk about, because we all say let's go to advising, but you can scale bookkeeping because we can have checklists and you can have training courses and you can educate someone on it. Until we define what consulting and advisory is, how do you scale it? Because like right now, a lot of the people you look to in the industry and think, wow, they're probably a great advisor, it's a bunch of soft skills that they casually learned along the way. Like the things you learned about advising clients, a lot of it, yeah, there's finance, accounting, CFA type stuff, but there's a lot of soft skills in like how you break the news to clients and how you're just like politely, what you've just described as fraud. We cannot do that. You know, like you're never taught. And like, I've realized like through my own practice, like there's so much of my practice that was never taught. We were taught how to be accountants. We were not taught bedside manner. And the thing is, how do you scale a service that's very built on how you are, how you think, your thoughts of accounting, right? Your experience. And the thing is, like, you can create a checklist for a cash flow forecast. So I think we'll eventually have to have the tiers of advising, and we'll eventually have a top one where it's like, it cannot be taught. It's something you've been trained. And we already kind of have it like in the M&A space. Like that's the sort of thing you don't learn from a book, or you can learn it from a book, but like you need to learn it from someone who's been through it before. And it can be like, look out for this, look out for that. That's going to be a shit show, right? That, I don't know.
I've always looked at it as various grades. So like we even teach this actually, to be quite honest, where you've got the foundational layer is the bookkeeping. And as you said, you can have systems, checklists, process, you can standardize it. That's the core of every business. And then I really do look at what we call controllership here at Helm. And I mean, that's kind of a catch-all term, because if you're a true controller, like everybody on this call is savvy enough to know the range of services that a controller can provide. But like ultimately speaking, what we're really talking about is that cash flow piece where you're using the forecast to do what you said, which is it's not just the forecast. We always warn people. It's like, as soon as you do the forecast, you're going to get a bunch of questions. Like, how do I improve my receivables? Like, what do I need to do to do that? What should I do here? Like your problem isn't the forecast. Your problem is the scope creep behind it. Cause most people are just thinking, oh, I just do the forecast and that's it. But to your point, like there's so many things behind it that you can do. It can quickly become scope creep. But I do think you can scale that. Like, I do think that with the cash flow piece, you can formulate a checklist around it that then leads to other questions that you can. Whereas I think once you start creeping past that into like true treasury management, financing, and like you're starting to creep up into that CFO tier. And I do believe that is much harder to scale because I believe, and I think that that's mostly based off experience. You know, like you've had 10, 15, whatever years in the business. Not to say that you need 10 or 15 to be an expert. Maybe you got 5 and maybe you're just really smart. But I do believe you have to go through situations to kind of learn the ins and outs to truly provide that higher level, like true strategic value.
I think on the point of CFOs, that's the big thing with CFOs. Like, not in the way that people like, I'm a part-time CFO. That's really just a controller. I mean, like full-blown CFOs. If you're bringing one on to a certain extent, that CFO needs to have gone through just like an absolute dumpster fire through the ringer, because they are now kind of, they're strategic, and you want them to be in there and be like, don't worry, this is the plan, we're all following the plan, and we're getting through this emergency. But like, that's why, not why you're hiring CFOs, but the risk management perspective and the raising capital perspective, to a certain extent, that is experience. And you have to have had that sort of, you have to have been kicked while you're down and like been through it and be like, I can do this again. You don't want to like learn that with a client. Right. And that's part of why, like, I don't like calling myself a CFO. I don't call myself a CFO because I don't think I provide those kinds of services. Right. But that's a whole other rant that we can get into after this. Right. But yeah. You were saying something about controllers.
Well, and I think we were trying
to hijack that.
What's that?
You were saying something about controllers, and I hijacked it to complain about CFOs.
Oh no, I think you and I are on the same page. You know, I really do look at, we use the term controller, but that's a pretty broad scope. Like the true definition of a controller can be really broad. But I do believe there's pieces of the controllership space that you can scale. And I think you just need to define it. You need to know who your ideal client is and what they truly value, and then wrap your service around that. But again, I really do believe there's more to it than just the forecast. There's a lot of scope behind it. So we always like to warn people, if you're looking at just doing a cash flow forecast, like it's usually not $100 per month item. Like you need to put a lot of work behind it after, even before. Like it's a very iterative process before, where it's conversing with the client. Hey, what do you think your sales are going to be? Why? You know, lots of asking why.
I think with scaling advisory and controllership and everything, we'll see a lot of what Summit CPA did, right? I don't know how much everyone knows about Summit CPA. They're a part-time virtual CFO company based out of Middle America somewhere. And when you hire them, they kind of drop in a finance team. They've got the CFO, controller, bookkeepers, that's the whole thing. And I think we're going to see a lot of that, because you can scale bookkeeping, you can scale controllership. You can checklist it out. You could, like you're saying, I could have a checklist for the questions to ask to create a 80% good cash flow forecast, right? But I think what's going to eventually happen is you'll have teams of controllers and bookkeepers. Not to say they're not amazing. They can be amazing, but there's only going to be a handful of that next level thing. Not next level, but I mean, like, you don't even need that much at next level. A lot of businesses just need bookkeeping, controllership, and like taxes, right? You just kind of need that advisor on call. That's like, that's above our pay grade. We're going to go get the partner. He's the one that's seen that before, right? And I think that's how scaling it will kind of become, that we will find out how to scale cash flow forecasting and basic advisory. but you'll have certain people who've been through the ringer who can kind of help those kind of not more creative problems, because like not every problem is by the book. There are certain problems that you bump into and you're like, I know the answer to this. It's you have to do XYZ to fix it, right? And then there's other things that are problems and you're like, how the hell do we get out of this? This is like a situation, right? And you need the people who've been through the situations.
Yeah, 100%. I totally agree with that. To one of your previous points, I think that most businesses and most of their problems can be solved with structuring them a bit better, giving them better processes, and really thinking about that stuff behind them, which all ties in with everything that we're talking about. And to be honest, like that in of itself, to me, is a form of advisory, because I do believe there's people doing it, but there could be a lot more.
I agree. And I think that's where I'll eventually go with my kind of advising, the kind of, this is my methodology behind how you should run finance. I'm going to drop it into your business. Yeah. I'll be the controller. I'll do the compliance, bookkeeping, the taxes, I'll figure out if it's an expense or a payable for you, right? But this is how you do invoicing. This is how you check profitability. This is how you do finance. And I think that style of advising is much more needed than the more nebulous cash flow, because there's a ton of businesses, right? So very small freelancers, they can just kind of wing it. They're just trying to bring in enough money to survive, right? But then there's this huge gap between freelance that's doing well enough and business that's large enough that cash flow forecasting is a legitimate, constant need. And those businesses, their finances are frankly fucked. They have no idea. They just have no idea. And I can't blame them, because no one teaches you that net 30 is bullshit. That's something that like accountants and cash flow people are just like, there's no need. And I always use this example. Net 30 made sense 50 plus years ago when I mailed an invoice and you mailed a check, right? Like when my dad started practicing, he's also an accountant. He's a real accountant. He's a CPA. When he started practicing, that's how things were done. Things were on paper and like it made sense, right? Yeah. But nowadays, when there's like a gajillion AR tools, I swear I find a new AR tool every week. And I'm like, who the fuck is this company? And they've got like 500 employees and I've never heard of them, right? There's so many AR companies, right? There's so many tools. These small businesses need someone with the experience to come in and be like, this is how your financial system should look. And it's a tougher sell than compliance, bookkeeping, or controllership. Not every business wants to pay what we would want to get paid to do that. But I think there's a much bigger need for it than this whole kind of nebulous advising, right? Or cash flow forecasting, because cash flow forecasting is sexy. But like at the end of the day, in a small enough business, you can forecast all you want, but you can't do shit. You can't move the levers. The forecast is, you just get to have a map of how fucked you are over the next 3 months. Like, that's cool, right? You just get to know that over there on September 7th, you're going to run out of cash. What am I going to do? Get a loan in that amount of time, get a line of credit, right?
Yeah, you still need to do something about it.
Yeah, you still need to do something about it. And some businesses can't, right? Sometimes like the cash inflows and outflows are so not strict, but so inflexible, where it's like, even if you find out you're about to have a cash flow problem and you can see it coming, like you can see the disaster coming, what are you going to do? Right? Like right now, where we all think there's a recession coming. Okay. So we know it's coming. And us as advisors, we're here and we're like, all right, that means we have to prune expenses, cut expenses, build savings, get the line of credit now, and just try and fortify ourselves, right? But to a certain extent, all we can do is wait for it to hit. And with smaller businesses, like, yeah, you can cash flow forecast, but sometimes they don't have the resources to get the capital. And cash flow forecasting is like, cool, we're going to have a problem in 3 months.
Yep. No, 100%. And I do think there's, at some point you have to consider the size and the scale of the business. So if you're thinking like small solopreneur type freelancer, it's a very different situation than, a company that's grown to 10 to 20 people. And, there's a grade of business in between there that as they grow, I think to your point, like they've got legitimate cash flow issues because they're trying to grow, and growth takes money and time and a lot of pain. And, I believe that's where the cash flow forecasting can really fit in, and it can fit in well. I actually also really like it for people that are cash cows, but that's a completely different story that we can talk about another day. But I think that speaks to your point. Like there's just, at some point you're probably too small. And so don't fit, round peg in a square hole.
Yeah. For full-blown cash flow forecasting, where there's no sort of process improvement, I feel like there's so few companies that fit into that like ideal client need, right? You do have to have the advising and teaching people how to fix thing aspect. And side note, to talk about chat for a second, on the point Beverly's making here, right? A lot of the accounting industry and a lot of our accounting thoughts has never progressed since the 70s, right? So that's like net 30, or like she's saying like individual ledgers and stuff. Back then, accounting took time in a way it doesn't take today. Like it still takes time, but like it was so manual and there was so much work that a lot of our processes and thoughts even never really progressed since then. And you see it in cash flow a lot too. Sorry, that was a tangent. Anyway. I'm like reading chat on the side. But no, to keep going though in circles, we got to figure out what advisory means, and we got to be real honest with ourselves about, do we want to do it, and who the ideal clients are. Something I've learned while trying to launch my own advisory services, it's not every single business. Everyone doesn't need it. Everyone doesn't want it. Right.
Yeah. Probably sounds weird for me to be agreeing with that, but I do believe, like, if you look at, the proportion of all accounting, bookkeeping, whatever clients in the world, if you're thinking like huge companies that have hundreds of employees, like that's really the top 1% of all businesses, yet they employ like 80% of all people, right? And so it's really disproportionately weighted to the small business. Like I think it's 80% of all GDP is for people that are technically small businesses, some stat like that. And a large portion of those, to your point, would be, barely scraping by. So as you would allude to, like cash flow forecast is not going to do anything for them. But that being said, there's going to be a lot of people, 20, 30% out of that 80 are going to need the cash flow forecasting because they're growing, they're scaling, they got calls, they're manufacturing, so there's definitely a demand there. Yeah. I think it's just a question of what you're focusing on too.
And not to like totally talk cash flow forecasting this whole time. Like there is a need for
stop
it. It is. That's why I said you shouldn't have had me. You already knew my thoughts on cash flow forecasting. I'm gonna go write a LinkedIn posting. It flamed by accountants on this. Anyway, like that time I talked about balance sheets. Anyway, I think cash flow forecasting is good. And I do like that's more proactive than the traditional 3 statements. And it is a value that clients have, but I don't think it's the answer to the compliance problem the industry's having. It's not the end all be all. The reality is that for just the putting together the forecast part of it, the pure compliance, creating the report aspect of cash flow forecasting, you cannot charge the big advisory fees. You charge the big advisory fees for everything around it and being able to answer the questions. And I feel like
implement the change
to a certain extent. I keep going back and forth on this one thought, how involved and how much accountability I want to give clients. Because on one hand, I'm not a coach and I'm not that nice of a person that I can like every single week be like, oh my God, you're trying so hard. At a certain point, I'm going to be like, you're wasting all our fucking time. But to a certain extent, the business owners do not care about finance in the way we do. Like, they feel the pain of the cash flow problems, but without us, I guess, either implementing the change ourselves by kind of being like, I'm going to log into Xero and change all your payment terms, right? And being like, your payment terms now by default aren't net 30, they're net 15, fixed, right? There's things like that we can do. But there's other things like the client has to have the hard conversation with their client and be like, I want to get paid up front. We can't be there for that. But should we be providing the accountability where every week we're like, were you a hard ass on these sales calls? Well, you better have been. I think that's part of the problem that we're having with advising, that like, I think at the end of the day, we'll realize that a large chunk of advising is that coming in and telling the clients and kind of being the financial hard ass involved, that too, and all access and actually helping them fix things. And the problem is, how do we scope that at a price we're all happy with? Because I'm not going to give a client unlimited finance access to me for $200 a month, but every single client can't afford to pay like a $3,000 retainer, right? So it's like, how do we scope it? Now I'm just talking about my problem.
I think this is a problem for a lot of people. And I think that comes back to, what do you want to do? And then who are you targeting to do that? Because if you're trying to target solopreneurs that are only making $100K a year, they're not going to pay you $3,000 a month. That makes zero sense. But if they're growing towards $1 million and they're at 500, it might make sense.
Which is kind of shitty. And that's kind of why I started the newsletter, because I do feel bad for those solopreneurs that make good money. Because like, you see a lot like in the service space, because like I do a lot with service businesses, marketers, that sort of thing. You can have a solopreneur make $150,000 and have 20K of expenses. And like, that's good money. Like, if we take a step back from the accounting and the looking at numbers and all of our rich clients, 6 figures is good money in the grand scheme of life, right? But unfortunately, it's not good enough money to buy the help that a lot of them need. And it's a shitty thing to say out loud, but that is unfortunately a little bit of the reality. And hopefully someone invents a good enough course that teaches people that, can make it more affordable. But, as long as advising is done by like an echelon of accountants that all know what they're worth, right? Because I think all the really good advising accountants know that it's like 1 in 25 people. They're going to want the money for it. Until we can learn how to teach it for the CPA, then it'll be different.